This week, the UK government quietly changed something huge about crypto, and most people have completely misunderstood it. You may have seen the headlines: UK classifies crypto as property, or crypto now treated as property under UK law. And if you hold Bitcoin, XRP, Ethereum, or any crypto at all, that probably made you stop and think. Does this mean higher taxes? Does this change how crypto is treated by HMRC? And does this affect me right now? Today, I'm going to clear this up properly. No Twitter threads, no TikTok scare stories, no guessing. In this video, we're going to break down exactly what this new UK regulation actually does, what it does not change, and how HMRC still taxes crypto today, and the real difference between capital gains, income, and property. Because this isn't about fear, it's about clarity. And once you understand the framework, crypto becomes far less stressful. I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor. Let's start at the beginning. How the UK actually views crypto. First, we need a mindset reset. In the UK, crypto is not legal tender, not treated like cash, not automatically income, and not automatically property for tax purposes. Instead, HMRC uses a broader term, crypto assets. And that wording matters. HMRC does not tax crypto based on what it is. They tax it based on what you do with it. That is the golden rule. So when people ask, is crypto capital gains or income? The real answer is, it depends on the activity. Once you understand that, everything else starts to click. So what does HMRC mean by a disposal? One of the biggest mistakes people make is assuming tax only applies when they cash out into pounds. In the UK, a disposal includes selling crypto for pounds, swapping one crypto for another, spending the crypto in any way, or gifting crypto to anybody other than your spouse. So if you swap XRP into Bitcoin, or you trade ETH into USDT, use that crypto to buy something, that's still a taxable event, even if no money has ever hit your bank account. Once a disposal happens, HMRC asks one question: was this capital activity or income activity? That single question determines everything for them. Crypto falls under the capital gains tax system. This usually applies if you buy crypto, then you hold it and then later sell it or swap it for a profit. HMRC looks at what you paid, what it was worth when you disposed of it, and the difference between the two. All gains across the tax year are added together, and important points people often miss are these. Capital gains is annual, not per trade. You get a yearly allowance, and losses can be offset against the gains. And trading frequently does not automatically mean income. This is why record keeping matters, but it's still manageable. So when is crypto taxed as income? Some crypto activity is taxed as income, not capital gains. And this includes things like mining rewards, staking rewards, airdrops linked to activity, and getting paid in crypto for work. In these cases, HMRC taxes you based on the Great British Pound value at the moment you received it, even if you never sell it. Then this catches people out. When you later dispose of that crypto, capital gains may still apply again. So the same crypto can be taxed twice. Income when received, capital gains when sold. It's not crypto specific, that's how income received assets work. There's also been some new legislation about crypto as a property. So let's address this big headline that sparked the entire video. Yes, the UK has passed new legislation that formally recognises certain digital assets, including crypto, as legal property under UK civil law. This is real, this is new, and it matters. But here is the most important clarification. This is not a sudden tax reclassification. The law is about legal ownership and rights, not HMRC changing tax rules overnight. It affects things like ownership disputes, theft and recovery, insolvency, and inheritance and estate planning. Before this, courts often treated crypto as property anyway, but now it's clearly written in law. This is a major step forward for legitimacy in the crypto space in the UK. But what has not changed? For tax purposes, HMRC still focus on activity. Capital gains still applies to disposals, and income tax still applies to earnings. Crypto is now recognised as property in the eyes of the courts, but it's still taxed based on how you use it, not what the headlines say. This is where social media gets it wrong and why this is actually positive. This is not the government attacking crypto. It is the government saying crypto isn't going away. Let's formalize it legally. Recognizing crypto as property strengthens ownership rights, improves inheritance clarity, and helps recover stolen assets and gives institutions legal clarity. This is exactly what mature markets should do. But here is the calm reality. For you, you need to track your transactions. You need to understand your disposals and separate income from capital gains activity and also keep your records. If you're doing that, you're already ahead of most people. You do not need to panic. You do not need to stop trading. You just need structure. If your activity becomes complex, bots, DeFi, leverage, that is when professional advice makes sense. This is exactly why I created the free Crypto Liftoff course, because once crypto reaches the stage where laws matter, taxes matter, structures matter, guesswork becomes expensive. Inside the course, I break down how crypto markets really work, how to think in cycles, not hype, risk management from day one, and the exact strategies I've personally used through multiple bear markets and bull markets. This is no cost, there's no paywall, there's no pressure, it is 100% free. If you want it, you can head to cryptowolfpack.co.uk and click on the free course and you'll get instant access. Or you can go to the link in the description of this video. And just before you go, I wanted to say a genuine thank you for sticking with me all the way through this video. I know crypto tax and legislation isn't the most exciting topic, but understanding this properly puts you miles ahead of most people in this space. If this video helped bring you clarity, then please like the video as it really helps this channel. Subscribe for more UK focused, no nonsense crypto content. And most importantly, get involved in the comments. And here's my question for you. What part of UK crypto tax regulation confuses you the most right now? Capital gains, staking, DeFi, or this new crypto as property law? Drop it in the comments and I'll use your questions to shape future videos. And I'll be seeing you on the next one. But remember this, the strength of the wolf is in the pack.